Welcome to the deep dive. Today, we're jumping right into it, focusing squarely on the technicals and potential trading ideas for tomorrow. That's April 18th, 2025.
Yeah, based on that detailed snapshot you shared.
Exactly. We've got market conditions, specific recommendations for tomorrow, plus some, really important background on TSMC.
A key player, obviously.
Absolutely. So our mission here is to unpack all this, pull out the crucial bits, price trends, volume, indicators, basically help everyone get a handle on what might happen tomorrow and how to maybe approach it.
And we've got that broader market chat and the latest TSMC financials, too, which should help add some color.
For sure. So let's get straight into that technical picture you outlined specifically for tomorrow, April 18th. What are we seeing?
Okay, so first off, the price, 850. And the key thing is it's sitting below the 20-day, the 50-day, and the 100-day moving averages.
Right, which for anyone maybe newer to this, generally signals.
It generally points towards a short to medium-term downtrend. It's like the current isn't flowing upwards,
Okay, so that sets the immediate scene. Downward pressure. What about the recent price action? Looked pretty choppy.
Yeah, it's interesting. You had that gap down price opening way lower. Big negative signal usually.
Right.
But then it bounced. It rebounded. But
Yeah.
since then, it's kind of gone sideways, consolidating right around that 850 level.
Stuck in the mud a bit.
Pretty much. It looks like a zone where there's been a lot of trading, a real tug of war, like you said earlier, buyers and sellers really battling it out there.
So where are the key lines in the sand for that battle? The support and resistance levels for tomorrow?
Well, the analysis points to key support down between 740 and 770. That's important because it covers that low from the gap down where buyers did step in before and lines up with some older support too. Then looking up, the resistance seems pretty heavy in the 897 to 960 range.
Okay, why is that range so tough?
Two reasons, really. One, that's where all that heavy trading activity is clustered, harder to push through. And two, it bumps up against those moving averages we talked about, which often act like a ceiling.
Got it. So those are the levels to watch. Now, volume. You flagged that the rebound happened on lower volume. Why is that significant for tomorrow?
Yeah, that's potentially quite telling. When you see a price jump, but not many shares changing hands compared to usual, well, it suggests maybe there isn't strong belief behind that move.
Less conviction.
Exactly. And today's volume, around 21.66 million shares, I think it was, that's lower than the big up days recently.
Right.
So that hints that the short-term bullish push might be losing steam. It's a reason to be cautious about, chasing the price higher tomorrow.
Okay, so the bounce might be running out of puff. What about momentum indicators, like the MACD? What's that telling us?
So the MACD, it's giving a bit of a mixed signal, actually. The fast line, the yellow one, has crossed above the slow red line from a low point.
Okay, that sounds positive.
It is in the short term. And those green bars on the histogram are shrinking. That's often a sign a technical rebound is happening. But, and this is the important bit, the overall MACD value is still negative.
So below the zero line.
Yeah. So even though we're seeing this little short-term upward cross, the bigger picture momentum is still technically bearish. It's like a little bounce within a downtrend, like a flicker of hope, maybe, that the storm hasn't passed.
Flicker of hope. I like that. Okay, so putting all these pieces together, price below averages, consolidation, low volume bounce, mixed MBD, what's the short-term outlook specifically for trading tomorrow?
Well, based on all that, the expectation for tomorrow, April 18th, is probably more choppy trading, likely staying within that 850 to 875 range.
So you're grinding sideways.
Could be. The market might just need time to digest everything, but the key levels are crucial. If it breaks below 820, yeah, that could signal more selling pressure is coming back, maybe testing those old lows down towards 800 or even 770. If that happens, you'd really want your risk management sorted.
Yeah.
Stop losses, that kind of thing.
Definitely. And on the upside,
If, on the other hand, it manages to break above that 897 resistance, well, that could be a sign of a stronger short-term rally starting. Might be an opportunity for shorts to cover, or maybe even for nimble traders to jump in.
but cautiously given the volume concern.
Absolutely. Caution is definitely the watchword here.
Okay, let's pivot then to the specific trading recommendations you pulled out for tomorrow, April 18th, based purely on this technical setup.
Right. So first, if someone's already holding shares, like in this scenario mentioned, maybe holding 80% of their portfolio with an average price around 892.
Yeah.
The suggestion here, based on the technicals, is probably to hold tight and just watch things unfold. Observe.
Don't panic sell, but don't necessarily jump in with more just yet.
Pretty much. Now, if you're thinking of adding more, The signal to maybe consider that would be if the price can actually get above and stay above that 1-month moving average, which is around 897.
So sustained strength above that level might be a trigger.
It could suggest the bulls are starting to get the upper hand in the short term, yeah.
Okay. And what about someone with no position, sitting on the sidelines, looking at this tomorrow?
For them, the advice is definitely patience. Don't chase it higher,
Right.
especially with that slightly dodgy low-volume rebound we saw.
Wait for a better signal.
Exactly. Two things to wait for, really. First, let the market digest that investor conference news. See how things settle.
Right.
Second, maybe look for a pullback, a retracement back towards that, say, 800 level. If that happens and you see the MACD properly turn positive,
Crossing above zero this time.
yeah, showing real positive momentum, then you might consider buying maybe in stages, tranches.
Nibbling in rather than going all in at once.
Precisely. Spreads the risk if the bottom isn't quite in yet.
Makes sense. Now, you also looked a bit further out, providing some probability guesses for the next, 2 to 3 weeks?
Yeah, just trying to gauge the medium-term possibilities. The estimate was slightly tilted toward the upside, maybe 55% probability.
Okay, what's backing that slight optimism?
Well, a few things. The investor conference and the earnings report were strong, better than expected. That helped.
Fundamentally positive.
Right. Then you've got potential support from things like the National Stabilization Fund, maybe some helpful government policies. Plus, the demand for their high-end AI chips is just huge, right? 3mm, 5mm, making up a big chunk of revenue.
True, the underlying business seems strong.
And technically, we just talked about the MACD trying to turn positive, and some candlestick patterns looked a bit like they might be signaling a bottom, at least short term.
Okay, so a collection of factors leaning slightly positive. But it's not a slam dunk. What about the 45% chance of downside? What are the big worries?
The main worry is still those moving averages. The price is stubbornly below the medium and long-term ones, meaning the bigger downtrend isn't technically over. Those averages could easily cap any rally.
So hitting a ceiling.
Could be. Then there's the external stuff. Tariffs, the whole U.S.-China tech tension, especially if U.S. politics shifts. That's a constant uncertainty.
Geopolitical risks.
Exactly. And finally, just simple profit taking. After the good news from the conference, some folks who bought the dip might just decide to cash in their chips.
Sell the news, basically.
Could happen.
Yeah.
So yeah, positive signals are fighting against some pretty significant headwinds.
It sounds like a real balancing act. You also mentioned a couple of other technical points relevant for tomorrow.
Yeah, just to reinforce that MACD, while turning up, isn't strongly bullish yet. Still below zero. That's important.
Need more confirmation.
Right. And the recent volume spike. It shows a lot of disagreement, a big fight between buyers and sellers. That usually means more volatility in the very short term, so expect some swings tomorrow.
Okay. And the key level remains?
That 880 to 897 zone. Can it hold above there? If it can, sustainably, the odds of more upside definitely improve. If not, well.
Okay, so let's try and synthesize this specifically for tomorrow, April 18th. What's the absolute bottom line from the technicals?
Bottom line for tomorrow. Probability slightly favors a continued bounce based on the immediate signals. But, and this is a big, but it is not a confirmation that the longer-term downtrend is over. Not by long shot.
So, manage expectations.
Absolutely. If you're thinking of adding or hedging or any short-term moves, that 870 to 900 range is absolutely critical. Watch it like a hawk.
And if it goes the other way, below 820?
Then you need your safety net. Strict stop losses, maybe shift to a more defensive posture. Manage that risk above all else.
Got it. Very clear, very focused on tomorrow. Now let's maybe zoom out a bit from just tomorrow and look at some of the broader technical context you provided. Those moving averages, for instance. You mentioned they're acting as resistance.
Yeah, stepping back, those longer-term averages are pretty significant hurdles. The 200-day, which is a key long-term trend indicator, and the 100-day around 1052, that's a major resistance zone. It would take some serious buying power, lots of volume to push through that.
A heavy ceiling overhead.
Definitely. And even the 50-day around 1083 is clearly pointing downwards. You'd expect sellers to show up if the price rallies towards that level.
And the closest one, the 20-day.
Around 1092. That's the first immediate hurdle for any decent short-term bounce. The critical point here is if the price can't get back above, say, 980 to 1,000 and stay there relatively soon.
then the rebound might just fizzle out?
That's the risk. Yeah, it could stall pretty quickly.
Okay. And volume looking broader than just yesterday's dip. You mentioned a big spike, but then contraction.
Right. There's that huge volume spike on the initial rebound after the investor conference. Massive. But then yesterday, the volume shrank significantly, something like 21 million shares versus, 128 million on the big rebound day.
Wow, that's a big drop-off.
It is. And if any further attempts to rally happen without sustained, strong volume coming back in, well, it could just turn into weak sideways action, or worse, a bull trap.
Ah, the dreaded false breakout. Looks good, then reverses hard.
Exactly. Sucks people in, then drops. Need volume to confirm a real move.
Let's talk MACD again, but broader context. Still below zero, you said.
Yeah, zooming out, while it did cross positive on the shorter time frame, the overall indicator is still below that crucial zero line. We haven't seen a full, convincing bullish crossover yet.
So, still waiting for that stronger signal.
We are. And if those MACD histogram bars, the difference between the lines, start shrinking again without actually turning positive,
Yeah.
that could be a warning sign.
A sign of what?
It could signal that the rebound is actually failing, and we might head back down to test those lower lows again, or test the bottom signal.
Okay. Candlestick patterns. Anything interesting there in the slightly bigger picture?
Well, there was that recent bullish candle pattern that kind of swallowed the previous couple of down days. That often suggests a short-term bottom might be in.
A reversal signal?
Potentially, yes.
Yeah.
But the price hasn't actually made a new high since then, so the confirmation isn't there yet.
Still tentative.
Very. And you have to be wary of bearish patterns forming, too. Things like three white soldiers failing, where you get 3 up days, but they lose momentum. Or a shooting star pattern, which can signal the rebound is about to reverse. Keep an eye out for those.
Right. Always watching for signs the trend might be turning again. And those support resistance zones, just to recap the really crucial broader ones.
Yeah, so that 875 to 897 area we talked about for tomorrow, that's critical for the bulls to defend. If that breaks decisively, the odds of testing lower really increase.
Okay, and lower down.
That 740 to 823 zone, that's where the panic selling stopped for the investor conference. Seems like buyers were interested down there.
And on the upside, the first major hurdle.
Probably around 990 to 1,000.
Yeah.
That's likely where people who bought higher ups might start thinking about selling to get their money back. Break-even selling pressure.
Sonto, as they say. Makes sense. Okay, so that gives us a really solid technical picture, both short-term for tomorrow and a bit broader. Now, let's layer in some other context. We looked at a recent market expert discussion, right? What were the key takeaways there?
Yeah, that was interesting. It was a YouTube discussion, I believe, highlighting just how volatile the market's been, especially the sharp drop in Taiwan stocks, with a big focus on TSMC.
What was their take? More downside.
The expert acknowledged, yeah, there could be more short-term downward pressure, maybe partly due to margin calls and forced selling. But crucially, they also saw significant buying opportunities if the price dipped further.
Ah, a longer-term value perspective shining through.
Exactly. Very much a value investing approach. They really stressed being emotionally resilient and managing your capital carefully during these volatile times may be even more important than trying to perfectly time the bottom.
Sound advice.
Yeah.
Did they touch on the bigger economic picture?
They did. Mentioned worries about recession, stagflation, uncertainty around interest rate cuts, and those geopolitical factors we discussed, particularly potential U.S. trade policy changes, maybe under Trump.
So acknowledging the macro risks.
For sure. Oh, and an interesting side note, they mentioned TSMC's chairman has studied the Enron scandal.
Really? Why is that relevant?
Suggests a strong focus on corporate governance, avoiding pitfalls, aiming for long-term stability. A bit of background color.
Interesting detail. Okay, so that's the market chatter. What about the company's actual results? TSMC's Q1 2025 report.
Fundamentally, yeah, the backdrop looks pretty strong based on that Q1 report. The numbers were really impressive.
Give us highlights.
Okay, earnings per share, EPS, was 13.94 yuan, up over 60% year over year. Revenue also way up, 41.6%, to nearly 840 billion new Taiwan dollars. Net profit up 60%. Really solid growth.
Wow, those are big numbers. Margins holding up.
Yep, very healthy.
Yeah.
Gross margin 58.8%, operating margin 48.5%. And those advanced chips, 3nm, 5mm, 7mm, they made up almost 3/4, 73% of their wafer revenue. Shows where the demand is.
AI driving things.
Seems like it. Their guidance for Q2 also looks strong, projecting continued high revenue and similar healthy margins. They did mention a slight seasonal dip in smartphones, but said strong AI demand was offsetting that.
Any warnings? Risks mentioned?
They did flag potential risks from tariffs again, acknowledging that external factor. But overall, the market saw the report as a definite solid beat.
So that likely helped boost confidence and maybe supported that rebound we saw.
You'd think so, yeah.
Yeah.
Provide some fundamental justification for optimism, at least.
Okay, good to have that fundamental anchor. You also looked at some historical data, EPS and PE ratios.
Yeah, just for context, looking back, TSMC's EPS has grown pretty steadily since around 2017, with a really noticeable jump after 2020.
Consistent performer?
Very much so. Now, the price-to-earnings ratio, the PE, that's bounced around a bit, as you'd expect. But if you take the projected EPS for 2025, which is around 55.76 yuan,
Yeah.
and apply a historical kind of PE multiple, say 20 to 25 times earnings, that suggests a potential stock price range way up between like 1115 and 1,394 yuan.
Significantly higher than where it is now, just based on earnings potential.
Exactly. It shows the long-term potential if the market values it similarly to how it has in the past. Even looking way back to 2000, the EPS trend highlights that consistent growth and resilience.
Interesting perspective. And one last piece of the puzzle, executive stock purchases.
Right. This just came out recently, April 2025 news. The chairman, C.C. Wei, actually increased his personal holding by over 400 shares back in March.
Oh, when was that relative to the price?
It coincided with the stock price dipping below 1,000 yuan.
Ah, buying the dip himself.
Well, it was part of a broader distribution of restricted stock to about 26 senior executives, totaling over 2,200 shares. Worth quite a bit, over 2 billion NTD based on the late March price.
Okay, so maybe not just him personally buying on the open market, but still receiving shares.
It was restricted stock distribution, yes, but insider activity like that, especially when the price has fallen, is often seen as a positive sign. Suggests management is confident about the future.
Belief from the inside. Okay.
That's another layer, you know.
Definitely.
Okay.
Okay, so, wow, we've covered a lot. From the nitty-gritty technicals for tomorrow, April 18th, with those key levels around 850, 820, and 897.
Yeah, the short-term focus.
All the way through the broader technical picture, the moving averages, volume, SPD, then layering on expert opinions, the company's strong financials, historical context, and even insider activity.
It's a complex picture for sure.
It really is. So putting it all together, the technicals suggest potential for more rebound tomorrow, but with significant risks and key levels to watch. The fundamentals look strong, insiders seem confident, market experts see long-term value despite short-term volatility.
That seems like a fair summary. That expert analogy you mentioned, the golden rain during downturns, or the former CFO saying, be greedy on dips, it points to that long-term thinking.
It does. But navigating tomorrow requires that short-term tactical awareness too. Understanding the data, managing risk, having a strategy. So, wrapping this up, what stands out most to you from this whole deep dive? Any final thoughts?
I think it's that tension between the strong fundamentals and the slightly shaky short to medium-term technical picture. The company seems solid, demand is there, but the stock chart is showing signs of weakness and uncertainty. Resolving that tension is key. And maybe the importance of volume watching if real conviction buying returns. That feels crucial right now. How about you?
For me, it's probably the emphasis on risk management that came through, both in the technicals for tomorrow and the expert commentary. In volatile times, knowing your downside, having stop losses or a defensive plan, that seems paramount. Maybe even more than trying to perfectly predict the next wiggle. Definitely food for thought as people consider their next steps.